Hello everyone once again, and I'm just turning around to see if that's come up. Yep, okay, you should be seeing my screen, which is great. Just for a change, what I've done is I'm starting with the Renko workspace, which has multiple Renkos, and the reason I've got that up is really just to highlight what is going on at the moment in terms of the values, and also to pick up on the points that Anna was making about accumulation distribution and the importance of support and resistance. Just before I do that, let me pull this over on another screen here. Oops, lost that. Bear with me a moment. Got it here somewhere. Not that one. This one. There we go. This is basically the VIX. This is on Trading View, where we have many of the quantum trading indicators, as you probably know. I've got the VIX here on the top left on 1 minute, 2 minute, 3 minute, and 5 minute. And if you're trading indices or indeed any market for a view on sentiment, then this is certainly one of the key indicators to have up at any one time, either as an intraday trader or as a longer term stock investor or investor indeed in any other markets. It gives you a heads up on sentiment. For those of you who are not familiar with the VIX, it works inversely. So if the VIX is rising, equities are falling and vice versa. But it gives you an intraday perspective. We've got the trend monitor here, as you can see, works in exactly the same way. So we've obviously had a little run up here in the VIX. So in terms of a reaction in indices, we would expect the indices to be falling against that. And if this duly reverses, then we'd expect to see indices rising again. So we've got the trend monitor blue here. So we've got a rise in the VIX here. It's starting to trickle through into the 2 minute. We've got it on 3 minute here. And it's a little bit choppy here on 5 minute. No real strength one way or the other at the moment. But if a strong trend develops up on these faster timeframes of 1, 2, and 3, ultimately they will move right the way through into the 5 minute as we had here. We had this strong run down. That was reflected in a strong move higher for indices, and now we've got a little bit of indecision going on at the moment, and it has a little bit of a bullish sentiment towards it. So we expect to see indices at the very least pausing. So just move that out of the way, but I would urge you to have the VIX up somewhere you can find. If you don't have it on your platform, or if you don't subscribe to Trading View, you can certainly find the details over on investing.com, where they'll have it in real time there as well. The reason I wanted to highlight the Renko is, first of all, it's just a terrific indicator to use with in combination with time-based charts. What I've got set up here is the Quantum Renko Optimizer. The top left, I've got set at 15 second to mirror what's going on in terms of the time chart below it. This one is set to 2 minute, and this one is set to 3 minute. And we're getting the traditional brick size. But what I want to point out to you are several things. If I pop this one open, this is the 3 minute. Now, at first glance, you might think, great, okay, fine, there's some nice moves here, and indeed there are. Two things. First of all, the accumulation distribution indicator, this works on the number of times a region is tested or retested, and therefore increases in width. In other words, it displays automatically those areas of strong distribution or accumulation, support and resistance, if you will. So the thicker the line, the stronger that level, that area. And as you can see here, we've got a cluster of 2 here, which acted as a really strong platform when the market reversed against them and duly rallied off both. You can see down here, you may not be able to see these numbers. These have been tested a couple of times. These have been tested several times. This has been tested 7 times. So these are very strong areas. And when they cluster together in this way, it makes them even stronger. So we've got 2 or 3 very close together. It's an immensely strong area of support and resistance or accumulation distribution. The second point is this. Up at the top here, we've got a figure of 96. What does that mean? Basically, it means that each of these bricks is equivalent to 96 points on the YM. Now, if you're not familiar with the YM, the mini YM is $5 a point, and the large Dow is 25. These are futures contracts. This is the June contract for the Dow 30. In other words, each of those bricks is worth 96 points. So I'll leave you to do the maths, but we're getting on to $500 a brick here. And this is a pretty fast chart. So it gives you a perspective on the huge ranges that these markets are moving in, which is the first point. But secondly, and more importantly, it gives you an idea of the profit availability if you are trading these markets using something like a Renko, which is smoothing out the price action the whole time. These are extraordinary moves. I'll go over onto all the time-based charts where you'll see the three indices together. But these are moving in huge, huge moves every day. I mean, we are seeing 1,000, 1,200 points. You know, this is now regular at the moment. This is not going to continue forever, but it's being reflected in the Renko Optimizer. And what the Renko Optimizer does, it has two options. You can either set a brick size yourself, and I'm sure a lot of traders will, but what the Renko Optimizer does, it delivers the optimal setting for that particular market in any trading session. So what it's telling us right now is that the optimal setting to trade the YM in this market today on a 15-second chart, which is pretty quick, let's be honest, this is the time-based chart below. These bricks are running at 23 points, in other words, 130 odd dollars. These are running at 70, so $350 a brick, and these are running, as I say, at 96, so almost $500 a brick there. So taking one of these bricks out is hugely profitable. And when you look at it in that context and you see the opportunity that's delivered with the Renko, either to the upside or to the downside, these are massive moves. And in addition to that, you have the comfort of having the trend dots, which work perfectly with the Renko Optimizer. Basically, they work very close to the price action. And what we always advise and strongly recommend to all our customers is they use both the trend dots and the trend monitor. And the reason for that is not because we want to sell two indicators. It's purely because the trends work very close to the price action. You can see what happens. The trend dots change very quickly on the change in sentiment, but the trend monitor changes less frequently. It takes a more considered view of price action. But once the trend dots have changed and the trend monitor has changed, then it confirms the trend. Now, you know, a lot of traders, maybe they use the trend dots to get in early. Maybe they wait for a combination of the two to confirm. That's a personal decision. And that's why we're recommending using both together. They are the perfect complement, not because it's the basis to sell two indicators. It's purely because they work so well in that the trend dots give you a heads up first of all, and then the trend monitor, which takes a slightly slower perspective on the change in trend and really just looks at it and says, is this actually a true change in trend or is this just a pause point? If it's a true change in trend, it will go from a brighter color to a brighter color. So it'll go from this case from bright red, went into the darker red, didn't actually go to darker blue on that occasion, but went straight through into the brighter blue to confirm the change from bearish to bullish. And that's the reason we use them. They work beautifully with the Renko indicators, as you can see. And then below here, we've got the time-based equivalent charts, which of course we can apply volume price analysis straight through a VPA, cause and effect, effort and result, and everything else, supply and demand. You can see the little surge in volume there as we move away from this congestion phase, absolutely classic. Remember, this is a very fast chart, but the principles of VPA apply whether you're on a 15-second or a 15-day or a month, it doesn't matter. Now we've got a big spike in volume coming on that particular candle, bit of weakness there, so we're expecting a bit of a pullback. There's some selling gone on in that particular candle, so you know it's not a strong follow through. If this were going to follow on higher, what we'd have expected to see there was a nice close up with a nice wide spread to the candle, and obviously all green. What we've got is a wick to the upper body and a little narrow spread there, so we've got some weakness coming in. It's not to say it's going to reverse. The trend monitor you can see here still holding us in. It's the beauty of the trend monitor. It smooths all this out. We developed it to remove some of that fear that always comes when you're in a strong position. You've got into the market, you're making some decent money, and then the market starts to reverse against you and panic sets in and you think, oh my God, I better close out, and you take your profit off the table, and invariably what happens, the market maybe congests for a little bit and then carries on higher, and you're left regretting that decision. That's what the trend monitor was developed to do, pure and simple. And the reason for that is because that is the hardest thing to do in trading, bar none. There's nothing harder. Once you get into a market and you've got profit there and the market starts to pull back against you, then you start to panic and you make an emotional decision to get out. Everybody does it. You learn over time, but it's you know, that's part and parcel of trading. It's just one of those things that we have to cope with all the time. Just keeping an eye on the VIX over here, just see what's going on. I'll pull that over again so you can see that. There we go.
Sorry, man, could you just ask a question about the Renko setting?
Yeah, it's just pushing on a little bit higher. It's not falling strongly, so which is what we want to see if we're long the market. If it carries on like that, then you know, we may move into a short position. Just move that over there. Sorry, what was the question? I apologize. I do always have my chat box closed when I'm in full flow. Okay, Renko. When do you set the Renkos? You said it right. Okay, great question. Thanks, Ryman. I'm glad you asked that, actually, because this was one of the reasons that we have this workspace, is really to make the point that these numbers change throughout the session. This is not it's not a question of setting it for the day or for the 3 or 4 hours you're trading. You need to set these, or reset them rather, or check them at any rate fairly frequently. And the reason I set these up as 3 different time frames is because, just first of all, to give you an idea of the spread of the difference in Renko between the time frames, you've got 23, 70, and 96. And the rule of thumb, I would say, is if you're running on a very fast chart, so you're running on anything up to a 1 or 2 minute, then you really need to recheck that I'd say every sort of 10 or 15 minutes, just to make sure you're still running at the optimal. If you're running on the ATR option at any rate, obviously. If you're running at something like a 3 minute or 4 minute, then I would say you don't need to check it quite so regularly, maybe even something like every 20, 30 minutes, something like that. But you do need to check them, obviously. So basically, the faster your charts, once you're down into these 2, 1 minute and sub that, then you need to be checking it every sort of 5, 10 minutes if you're below a minute, and above a minute up to 2 minutes, I'd say check it every sort of 10 minutes, 10, 15 minutes, and 2 to 3, 4 minutes, then check every 15 to 30 minutes, something of that nature. Very rule of thumb. It will, of course, vary depending on the momentum in the market. If you're trading in a very fast-moving market, these are pretty quick market moves. Obviously, those numbers will change more frequently. If the market is sluggish, perhaps only trading in a range of 100 or 200 points on the day, which, let's face it, is a lot more normal than we're seeing at the moment, then you wouldn't need to check it so often. So it's a little bit of rule of thumb. You'll get an idea for it fairly quickly. And I also say what will also impact that decision a little bit, not hugely, but a little bit, is which index you're trading. If you're trading the YM, that is the least volatile, I would say, of all 3. The NQ comes next, and then the most volatile is the ES at the top, which has huge volatility, and a mountain of ticks go through that every day. So that will also influence it a little bit, not hugely, but it will a little bit. So if you're trading the YM, you probably need to check it a little less frequently than if you're trading on the ES at the other end of the spectrum. So I hope that answers that one for you. We're still pushing on higher, which is really nice. And just remember, just to remind you, you know, each of these bricks, this is worth $350. So if you're in and out on that brick, that's $350, and you're about to make another $350. So you've made $700 in what, I don't know, 4 or 5 minutes, something like that. And that's not bad going by anyone's stretched imagination. Really moving nicely. You can see it here on the time-based charts. Pop that one open, see that little, this is on the 2 minute. Again, you can see the trend monitor holding us in. We went through this, it's a nice example actually. We saw this, we ran into some resistance here on the accumulation distribution. Not hugely strong, but certainly strong enough to cap it off. The market fell back, we saw falling volume. So, you know, that's good. It means the market, there isn't heavy selling pressure, there is some, but we've got a falling market with falling volume. So we're not expecting this market to fall much further, which it hasn't. We then went into this little transitional phase of color. And really, this is what it's all about. It's giving you the confidence. And of course, you wouldn't be doing this just in one time frame. You'd have a slower and a faster. But it's just giving you an indication that, yeah, okay, we've got a slowdown. Yeah, we've got a bit of a slowdown. Okay, now we seem to be picking up again. Now we're coming out the other side. And that's what it gives you. It gives you that confidence. We're holding in here through this congestion phase between 600 and 700, which is a big range. Let's face it, it's 100 points. But now we're pushing on higher. The last candle there, nice, good volume. We've got rising volume and we've got rising price, so that's nice and steady for us. And in addition to that, we're now moving up into a low volume node. We're on the 2-minute low volume node here on the accumulation distribution indicator. And using the VPOC histogram on the right-hand side there, you use it in exactly the same way as you would use price-based support and resistance, because it's giving you the perspective on congestion phases from a volume perspective as opposed from a price perspective. These are obviously visual. You can see the price, resistance. You can eyeball it there, and the accumulation distribution indicator gives you a visual metric for it, and also the strength of it. But when you're on the chart without any idea of the accumulated volume at the various regions on the chart, the various price levels, then you can think of volume in exactly the same way. Where you have heavy volume, it means the market's congested there. It means there's going to be a lot of traders sitting there. There's a lot of orders sitting there that need to be executed or filled or closed, whatever they may be. And so when you approach these higher regions of volume or lower regions, as we're doing now, what you expect now is the market to move through there pretty rapidly, because there isn't a lot of volume to sit there to cause the market to congest. So it's exactly the same principles as you would apply with price-based support. It's just a different way of looking at the chart. And we're just carrying on up nicely. Yet more money in the bank. And each of these, even if you're trading on the 15-second, each of these is $115. So, it's good, healthy profit. The trend dot's nicely supportive. The trend monitor helping to keep us in on the various time frames. You've got it multiple time frames. It's exactly the same principle. We use 3 Renko charts, 3 time-based charts. You're always using multiple charts, whether it's time-based or non-time-based. Really nice move. Nothing much to scare the horses at the moment. Just clicking over onto, just checking on the volatility index. It's actually trying to track higher, but it's not doing so at the moment with any great strength. Let's head back onto the time-based charts. Just pull up the 3 indices, because it's really what's interesting about today is it's really the NQ was quite a laggard earlier on, and this is the YM, this is the NQ in the middle, and over on the right-hand side we've got the ES. They're all pretty much obviously going in the same direction, which is what you normally expect to see. But what was interesting earlier on, about an hour or so before we started the webinar, it was the YM. That's why I've got the YM set up everywhere, because it was the YM that was really driving the market, and the NQ was lagging behind. And on a lot of occasions, you see the NQ leading, and maybe the NQ leading the ES, and the YM is maybe even lagging, or maybe even going the opposite direction sometimes. So again, it's just a heads up if you're seeing very strong moves, and we've had it in both the ES here and also on the YM here. If you're seeing that and you've maybe got one which is lagging, it gives you a pretty strong idea that that's going to pick up, which it does. As I say, earlier on it was about 100 points lower than it is at the moment, and now it's picking up speed and joining the others. So it's just another facet, another way of trading index futures. If you're an index trader and you want to trade futures, have all 3 up. They give you different perspectives on price. They give you different perspective with the indicators, and they give you different perspective with the volume. Now, the issue we've got at the moment with volume is this, and I'll pull this one up just to make the point. Some really crazy volume through here, and the reason for that is very simple. If you're familiar with trading futures, you'll know that the breakers have been coming on regularly in these markets over the last 2 or 3 weeks. And what the breakers do is they protect the market falling or rising through particular percentages on the day to try and literally put the brakes on these wild swings. I mean, the final option, I guess, is to close the exchanges, which has happened. It happened at 9/11 and so on and so forth. I think through 2007, some of the crash as well. But those breakers are there to protect the markets and protect traders from huge swings. So we've seen those kicking in regularly. And the problem is, of course, it doesn't report the volume. So a lot of these days here are truncated. It's not a true representation of the volume associated with those days. And if you're looking at the volume charts, you'll see this everywhere. Please just bear that in mind and think, well, why have I got this anomaly in terms of volume? That's the reason why, because the markets either crashed or surged and the breakers came in and the markets were closed for several hours. That's the reason why. All pretty much ticking along nicely. Nice little move here. Nice little VPA lesson there. A rising volume, rising price. That's what you want to see. Got price going up nicely. Nothing particularly scary. And as I said, we're coming up to a low volume node here. So it's there's nothing particularly in terms of volume or price to hinder the move right now. Just go on to the tick charts, which is another way of trading any market index, whatever it may be, using a chart that has no representation of time. A Renko has no time representation whatsoever. Those bricks will be built when the price has moved that particular either the ATR setting or the setting you've prescribed to it. That's it. The brick closes off and it moves on to the next one. And every single brick will build in a different time frame. It's completely independent of time. It's precisely the same here with tick charts. They are independent of time. I've got the these. I need to change these over. Just do that very quickly. Change that to 144 tick. There we go. This one is 610. And this one is 987 tick. There we go. They dropped off a bit. They were running a bit quicker than this. And again, the advantage of trading on tick charts and why a lot of traders migrate towards tick rather than time is because it reveals momentum. When the market's fast moving, then the tick chart will move quickly. Exactly the same principle as with a Renko. The indicators work in exactly the same way. As you can see here, we've got the trend monitor on here. We've got the volume point of control on here. I've got the accumulation distribution on here. I haven't got trend dots on here. I tend to use those much more on the Renko, but every other principle is the same. I've got a 15-second time chart up here because I always like to have a time chart somewhere or the other. And of course, with using the tick speedometer, which is where I got these settings from, because most traders, when they're trading tick charts, will guess. They won't know what the optimal setting is. They'll use something that maybe a friend has told them or a trader has told them or they've seen in a forum somewhere or the other, and they just use that. It's why we developed the Renko Optimizer to deliver the optimal settings. It's why we deliver the tick speedometer, because it delivers the optimal settings for you to trade in that particular market. And we're on the index. This could be commodities, could be stocks, could be spot forex, could be anything. It doesn't matter. And it will deliver the optimal setting up here. What it will also tell you, these are the optimal settings down here. There's two figures here because this changes less frequently. When you're trading on fast markets, you don't want to be changing the charts too often. This is the actual, this is the closest to actual. What this also tells you is participation and whether that's high, medium, or low. And you can see we've got fast, medium, slow. These are all running slow right now. So the participation, the activity, if you like, is draining away. It's not particularly strong. What you want to see is when you're trading intraday on fast charts, you want to see these running in orange pretty much, and obviously with punctuated with green spasms of volume injected into the market. But primarily you want to see orange and green. If you're trading in red across all three time frames, it means the market's in congestion. We're lacking momentum, we're lacking participation, we're lacking activity. We've just got to wait and be patient for activity to pick up again. Just looking over at the VIX, that's come off a little bit, starting to pause a little bit in its upswing, starting to come off now. So maybe we'll see an uptick in the indices. That's why we developed the tick speedometer. And the other beauty of it is it means we can apply straight through volume analysis principles off the volume and price relationship here, because this is a time-based chart. That's 30 second, this is 2 minute, this is 3 minute. So you can apply VPA whilst having the advantage of trading on a non-time-based chart, a tick chart. Just see if this develops into anything more serious, a breakaway. Still not great participation. This has gone to orange. Speed's very sluggish. These should be up in These should be up 1,500, 2,000 tick. And if this was on the ES, just to put that in perspective, this would be running at 9, 10, 15,000 ticks, something like that on a 3-minute chart. Got the bearish trend developing, breaking away from the volume point of control. Let's move over onto, let's go back onto the time-based charts and pull that up there, be easy to see. There we go. Put it up on 5. There we go. This is the 5-minute chart. Here's the reason we're seeing a bit of a pullback. What have we got? We've got a nice shooting star candle. The wick here, you may not be able to see it, literally goes up to 7760. So we've got a 20 point move there. Good volume under that candle. What are we expecting to see? A bit of weakness coming into the market. Why? Because we've got decent selling in that candle. Straightforward. It's you know, VPA 101. Those are the sort of signals you're looking for. You've got a pivot to the upside, 3 candle arrangement, volume here, and a pivot there, and you know, you're expecting to see some downside price action. If you saw that coming in and you're trading on a faster time frame, then you know it's a pretty strong signal that the market is going to react. It's going to sell off a little bit. You might decide you want to close out, sit tight, and wait for the market to break to the upside if you think it's going to continue higher. But what it gives you is it gives you the confidence to actually make that decision analytically and with logic rather than an emotional response, which is what most traders do. Let's face it, you know, that's what most traders they'll look at that. Oh my God, the market's reversing. You know, why is that? And what's ironic is that I'm looking at over at the VIX now. Let's pull the VIX back over for you rather than me look at it all the time. There we go. We've had this little bit of an uptrend. We're starting to see, sorry about that, we're starting to see the trend monitor. You can see there on the 1 minute, it's gone to a little bit of transitional color. Maybe see that over on 2. Nothing changed there yet, but you can see the VIX, you know, it's starting to drop away. Might see the trend monitor transition straight through to red. Nothing on 3 at the moment here, and nothing on 5. You wouldn't expect it yet. So we're starting to see that pull off a little bit. And obviously, if you're looking at this and you're wondering whether this is going to go higher, you know, that's an important piece of information because it gives you the confidence again to sit in that particular move if you're looking to maintain the position to the long side. What's also interesting, you can see here we've had the selling under that particular candle is lower than the previous one. So we've had some heavy selling going in this candle. More selling in that candle. It's really a question of what goes on with this candle now, whether we see this react or whether we're going to see another down candle. And if we see another down candle, how much volume are we going to see with it? And what is it? What is the shape of the candle? Is it going to be narrow with a wick to the lower body? Is it going to be narrow with a wick to the upper body? And you just have to wait and be patient. The reason I've got this volume turned off here in real time, not in real time, but in terms of completion of the candle is because our broadband is restricted at the moment because of obviously what is going on globally. We normally run at about 300 download. We're currently restricted to about 75, which is fine. But it's just, we've got so much data streaming in across the terminals here that just want to make sure that we don't crash the systems. So this will update. You can change it in the settings. You just go into, oops, sorry. Just go into indicators here. And there we go, volume up, down. See, I've got it on bar close, but you can change that to on tick or on price. And it'll, in fact, I can do that now. There we go, put it on tick and apply that, and the volume will then appear. So we'll get the volume in real time building as the candle develops. Be interesting to see how much this volume builds on this particular candle. It's tried to rally. Not looking particularly strong. And really all this has come about through seeing this particular little signal here, which most traders don't see because they're not using volume, they don't understand volume. If you're using volume, it just gives you a straight heads up as to what is happening, going to happen next. And that's what VPA is all about. There are many other applications of VPA, but in its natural, in the natural way that we use it, it is about telling us what is going to happen next, whether that's in a trend, whether that's a trend reversal, whether it's we're looking for buying, are the buyers coming in, are we looking for the sellers, what are we looking at, or is it giving us the confidence to hold a position, as indeed it did on these 3 candles. We had the nice 3 candles here. That was telling us loud and clear, that's all looking fine and dandy. And then we get this one and we go, warning signal. The market's tried to rally, it's fallen back. It's a classic example of effort and result, because if effort and result were in agreement, then under this sort of volume, we should have seen a green candle, certainly wider than this one. So it should have ended up about here, pretty much at the top of the pivot probably. All things being equal, it hasn't. It's fallen back down here. So what's your conclusion? Everybody, or the big operators at any rate, are selling out in here. And that's what we're seeing right now. We're seeing that reversal take effect. And we're seeing that pretty much across the 3 indices here. Less clear on this one. We had a sort of doji indecision candle on that one. And similarly on the ES, funnily enough. And again, it's another reason, as I said earlier on, it's another reason to use these 3 indices as related markets. They are very closely related, but on occasion like that, you will get a very clear signal on one as we got there, probably less clear if you've not traded VPA for 20 odd years like we have. And that just gives you the confidence to make that decision, say, okay, I've seen that weakness coming in, I know what to expect. And then you've got a decision to make. Do I stay in? If you've got a significant number of contracts in the market, you may decide to close half out or a third off, whatever it may be. Or if you've only got one, you might say, okay, well, actually, I'm going to take that off the table, close it out, because I think we're going to see some weakness here. I can always jump back in because the cost of trading now is peanuts. It really is truly peanuts. Let's just go and see what's happening in terms of currencies. It's the Aussie yen. Let's move that out of the way. Again, VPA applies to spot as it does to every other market. This was the buying we saw. We've written about that. Anna's written about it on her blog. There's various Facebook posts about it. Absolute ton. This is the highest volume. This is the Aussie yen on the daily chart. Massive ton of volume coming in here. Huge amount of buying, and we're seeing that take off. We saw it take off yesterday. A little bit of weakness coming in today. We've got some resistance building here. But what we're looking for, obviously, continuation of that on high, if that is going to continue building. In terms of the CSIs, that's also reflected there as well. The currency strength indicator, where are we? Currency strength in multiple time frames. That one, there we go. There we are. Over on the right here, actually I've got the 15, sorry, I thought that was the daily. Let's change that over to the daily. There we go. And what time frame is that one on? That's on 3 minute, okay. What we're seeing right now is, and you can see it here, this is on 3, this is on 5, and this is on 10. The reason we're also seeing that reversal in indices, that change in sentiment, Anna referred to it earlier on. This is the yen, the magenta line. We've got the magenta climbing. So in other words, there's yen buying. So there's a move out of risk on, moving into risk off, safe haven currencies for the time being intraday. A lot of yen buying here. We've got yen buying here. And again, if you put it all together, it all makes sense and it gives you all the information. We've also got selling commodity currencies now. We've got risk currencies being sold. This is the Canadian dollar. This is the New Zealand dollar. Canadian up here, very overbought, now selling off strongly, probably going to roll over here as well. What I wanted to show you here was the daily. This is what we're seeing right now in the longer term time frames. We've got the Aussie, the blue, the New Zealand, the grey here down at the bottom, the Canadian here as well. It was over here, but it's now moved up quite strongly. But all 3 commodity currencies are very strongly oversold. The Swiss franc, the Japanese yen, and the dollar, all safe haven currencies in one way or another, very strongly overbought. Now starting to roll, come off those high planes and start to dive quite strongly. So from a longer term perspective, if you were looking to, for trading opportunities, you'd certainly be looking at those for reversal opportunities. Ultimately, they may well develop into longer term trends anyway. But from an intraday perspective, what we're seeing, say, is this very strong buying of the yen here, which is going on the faster time frames. And it just all ties together onto the charts. We go back onto the indices down here. There we go. That's what we're seeing right now. It's developing into a decent move and really all just triggered off this signal up here. Pretty straightforward. I'll pass back to Anna.